So let's take a look at this one. Handout page 5. We're going into the next learning objective for planned asset disposal. So to get rid of your assets, there's really 3 ways. First one is retirement, just dispose of it. Second one, sale. And third one is exchange. We will not be doing exchanges in this class, it's too cumbersome. It isn't in intermediate accounting. Okay? So just overall, to do a disposal, what do you need to do at the time of disposal? It is necessary to determine book value. Didn't we just say book value about 3 seconds ago? What is it again? Cost, right? Minus accumulated depreciation. Be careful, not salvage value, but accumulated depreciation. Value in the books. Okay. So let's take a look at this example. I have a fully depreciated asset. What does it mean? I bought the asset on 1/1/07 for $20,000. Here it is, my equipment. I can even put the date maybe here, 1/1/07. And then it got discarded on January 1st, 2011. And there's no salvage value. Okay? It looks like it's a 4-year useful life. So if you do 20,000 minus 0 salvage value divided by 4 years, it's 5 years annual depreciation, and that's what we did. You see that? Every year. So December 31st, 2010 was the last time when we did the journal entry, and my accumulated depreciation is exactly at 20. I'm going to ask you, what's the book value at this for this particular asset? What's the book value for this particular asset?
Would it just be 5,000?
Will it be, no, what's the book value?
0.
0. Book value is cost minus accumulated depreciation, 0, all gone. I'm gonna revise this just a itsy bitsy. What if my salvage value is 2,000? Can you guess what will be book value in 4 years again, at the time of full discard? If your salvage value not is 0 but 2,000, what do you think will be book value at the time of disposal in that case? Will it be 0? Because the formula will be what? 20 minus 2 divided by 4. So depreciation every year will be a little bit less, right? So what will be full depreciation then? Not 20, but rather what? Go ahead.
Oh, I just thought it would, since the salvage value wouldn't be 2.
So it will be 2 exactly. Then book value will be 2, equals to our salvage value. If it's fully depreciated asset, you want it to be at salvage value because you planned for it. No wonder we keep subtracting it every time. Like up here, we subtracted because we don't want to depreciate over to that salvage value. Yes.
So in a fully depreciated asset, you said salvage value is book value?
Yes. And the fully depreciated asset, your salvage value is your book value. That was your goal. Okay? So here we're at 0. Okay? So we know the book value, and that's what you will be taking off your books. When you want to discard this asset, you need to get rid of that book value. So if I want this equipment to be gone, or to become 0, what do I need to do to that account? Huh? Exactly, credited for 20,000. And that's what I'm going to write up here as a journal entry. I'm going to credit equipment for 20,000. And guess what I'm going to do with accumulated depreciation? Debit. And I'm going to debit accumulated depreciation for $20,000. And in this case, there's nothing else to do because it's not a sale, so we did not receive cash, and we don't have any salvage value, so there's no gain or loss. It's just a wash. You took the equipment off your books. Okay? Does this make sense? So this one is just all gone. What's gonna happen if asset is not fully depreciated? That's my next example. Not fully depreciated. So what happens here? Instead of buying it at January 1st, 07, we bought it in 08. And it's still a 4-year useful life. See, I only had 3 years to get in. So my book value in this case is how much? What's my book value in this case? Yeah, be brave, $5,000. It's 20 minus 15, it's $5,000. Okay. Let's try to do a journal entry in this case. So what's the first account that I need to do? I need to credit what? Equipment. Okay. I'm gonna credit equipment. How much? 20. Next one right away is what? Accumulated depreciation for equipment. If you do them one after the other, there's a good chance you won't mess up something, because when you take these two, it's like you took off book value from your books. The difference between the two is exactly $5,000, so book value is gone. Now, what's wrong with a journal entry like that?
They're not equal values?
Rock on. Guess how many journal entries that are not equal that I've seen on the exam? Way too many, okay? Then it doesn't look like a journal entry at all, so be careful. What am I missing in this one? Am I missing a debit or credit? Go ahead.
Debit.
Debit, right? How much? $5,000. Any ideas what could that be?
Loss on disposal.
It will be loss on disposal, okay? Loss on disposal. Loss on disposal. Because we had that remaining book value and we got nothing for it, it became my loss. Okay. Somewhere on the side up here, put a tiny t count. So why is that? In general, we don't have gain and then another loss account. We have either gain or loss account. Okay? How does this behave? If you have a gain, gains have normal balances similar to revenues. Then which one is that? It's a credit, right? So gains will end up on the credit side. And losses on the other side, literally, losses are similar to expenses. So normal balances will be debits. So we ended up with a debit balance here, and it is a loss. Okay? So this is a general rule for anything. If you have a sale and you end up with a credit, it must be gain. And if you end up with a debit, it must be loss. Okay? So general rule in general. Okay. Yes, John.
Can you scroll back up to the fully depreciated asset column?
Yep. See, we're in balance, 20 and 20.
For like when an asset is fully depreciated and then when it's not, is the only difference that we have to account for like what was lost?
Yeah. Okay. The only thing. Now let's look at the sale. Okay. I'm gonna flip it over, and I gave you an example with this sale. Okay. So almost the same example as last time, except now it's sold, and we actually received cash proceeds, $8,000. Okay? The first step is still the same. You're gonna take off the book value. Okay? My asset is fully depreciated. I stopped depreciation at December 31, 2010. The very next day I sold it, so depreciation is up to date. Maybe highlight these, kind of like that, and write up to date. So what I'm trying to say is you don't need extra depreciation. Okay? If this date is not 1/1/11, you might have a partial year to account for first, before you can get rid of it. Okay, and you'll see that too, but for now, we're good. Okay, so here I come to that ginormous journal entry. I always start with a credit to equipment. 20,000. So that one is off the books. Then right away, before I forget, I go into accumulated depreciation debit. And that's $15,000. These two, the difference between them, gives you book value, which is 5. Okay? So book value in the books is 5. You received 8 for it. Is that good? Common sense, streets. What do you think we got? 3,000 more, which is your gain. Let's see how it's gonna pan out through the journal entry. So this is what I have. Then my step 2, put your cash on the books. Cash is 8,000. Is it debit or credit? You received cash, right? Debit, right? That's okay. It must be Friday. Okay? So we're gonna debit cash. $8,000. And now debits credits rules. I have 23 on the debit side and I have 20 on the credit side. What am I missing? $3,000 on the credit side. It must be my gain on sale. So you kind of can double check yourself because we know that book value was 5 between these two, and we got 8,000 for it. That gives you mental math 3,000 gain because you sold it for more than what the value was on the books. And then when you do the journal entry, debits and credits help you. You can compare the two and say, oh, I'm off by $3,000, and it is on the credit side, it must be my gain. Okay? Make sense? All right. Now I'm gonna scroll. Yes, Jen.
So the journal entries for like this example compared to the other ones, it's just showing the what's being gained versus lost.
It's one of them. And in the prior one, did we even have a sale? The prior one was no sale, there was no cash. See that? There won't be cash. The only reason that we ended up with a loss was why? It was not a fully depreciated asset. So anytime you discard a non-fully depreciated asset, guess what's gonna happen? You're gonna have a loss. Okay? So, again, if the asset is not fully depreciated and you have to get rid of it, you suffered a loss.
Do you have a loss on sale?
Yeah, just wait till like another journal entry, okay, and you'll see it, yeah, loss on sale. I wish we would never have a loss, wouldn't that be nice? Okay, that's a wishful thinking. So I'm gonna scroll in this one. Yeah,
So if it's a gain, is it fully depreciated?
not necessarily, this one is not fully depreciated, book value was 5, so it's not a fully depreciated. And we don't have salvage value here either, so salvage was 0, but book value was 5 if you compare these two. The reason we had a gain is because my cash proceeds were 8. Okay, can you guys be teachers? Can you revise this to put this on the exam so you have a loss?
The balance of, so the value was 5,000, but you sold it for 2,000?
Yeah, so if you put 2,000 in here, then cash is 2,000 in here. So you have what, 17,000 on this side, and equipment is 20. We're off by 3,000, but on which side? You'll have to put it here, and it will be a debit, and it is a loss. So 5,000 book value minus 2,000 proceeds, you just lost $3,000. See what I'm saying? You guys are good. That's a lot of good questions. That's how you learn, because you keep asking yourself questions. What if, okay? And how this journal entry different from the one that we just did, okay? Well, We had a loss, that's one difference, and it was not even a sale, that's another difference. Okay, does this make sense? Thumbs up, yeah?
Could you show me that, the loss?
The loss, I'll do this one with the loss. Okay, so I'm gonna grab another handout, maybe. And just revise it real quick. Okay, so the same thing as your example, but I'm gonna put here that we sold it for, so it's a little bit different, $4,000. Okay, so the same thing, I will get rid of equipment, and it's 20,000, and I will get rid of accumulated depreciation for equipment, and that's 15. That gives me book value of 5. Okay, then I will plug in my cash, $4,000, and I have 19 on the debit side. If I add up all the debits, 19, and my credits are 20. I am off by $1,000, so my debits equal my credits. And it is on the debit side, it must be a loss on sale. Loss on sale, $1,000. And again, book value is 5. Book value equals 5 versus your cash proceeds is 4, gives you a loss of 1,000. Okay, make sense? Make sense?
So loss on sale, is that always a debit?
Yeah, losses are always debits. Okay, that's why I gave you that tiny t. Losses are always debits and gains are always credits. Okay. It will be the same when we get to investments chapter. You will be selling your investment, and you can sell it for a gain or a loss. Still will be losses, debits, and gains or credits. Okay. Are we good now with this? Can we move on one more step? Okay, let's get one more step over. Okay. So this one, asset originally purchased on 1/108, sold on 6/111 for 3. So tell me guys here, what is different, or what do you need to pay attention to?
The date it was sold on.
Yeah, the date. What's funny about the date?
It was in June.
It's in June, so it's not January. So if you look on the books, last time you updated depreciation, that's an adjusting journal entry, usually done at the end of each year. So here, that's what happened. So we don't have more depreciation up to this date. So depreciation as of now is not up to date. So your first task will be to update depreciation. Okay, your first task. Now I want to revise this date a little bit to make our math easy. How many months is that?
6.
It's actually 5, right? 5, how come 5? So starting from the beginning of the month, January 1st, it's going to be January, February, March, April, May, so it's 5/31. This is not the full month, this is just the very beginning. So this is 5 months. But taking 5,000, that's your annual depreciation, divided by 12 times 5, we're going to have really funny numbers. So why don't we put that as 7/1, okay, to make it easier on us. So let's just do 7/1. 7/1. Then how much worth of depreciation do we need? Half a year, 6 months, half a year. How much will it be in dollars? If this is all annual, it's just gonna be 2,500, does it make sense? Okay, so your first journal entry, there's not much room here. If you could, I'm just jokingly, but mentally, you always forget to update depreciation, okay? So we're gonna do depreciation expense and accumulated depreciation for equipment for $2,500. So by doing this journal entry on 7/1/11, you get depreciation up to date. So if I post it, it's gonna be an extra credit just like that. Now I am at 17,500, that's your new balance. See what I'm doing? Alright, all good? I should have scooted you all over there because you're like way up there. I'm talking to the guys. Because it's hard, you're so close to the board, you can't see behind this lovely podium and everything else. And the second journal entry will be almost the same as we just did, the same logic. Can you try that? Can you do the sale itself? Yes.
Sorry, how did you get the 2,500 again?
I didn't, okay, so these are annual depreciations, right? And I only need half a year because this is now 6 months. So 5,000 divided in half is 2,500, that's how I got it. So try to do the journal entry for the sale itself now for $3,000. Give it a try. Down, double check what you have the name. Yeah, Joe.
So I actually have a question on a policy. So I was just, I was wondering
problem. Okay, so right guys, so let's see what we got here. Always start with equipment. Just drill in your head, start with equipment and then accumulated depreciation right away. So equipment, tell me if you got a gain or loss. Maybe I'll double check. Gain how much? 500, everybody gain 500?
Yeah.
Yes? Carl?
Yeah.
Yeah? Do I need to write? Carl's like, oh, she's pointing at me. No.
No, I know, I'm just,
Yeah. I know it's Friday.
yeah.
I'm with you. Okay. I've been in here since 7:30. Was grading your exams. I know, and then I had advisees too. Okay, equipment 20, accumulated depreciation 17,500, the new kind,
Like obviously I get it.
right? Then cash 3, and then you see what you need, a debit or a credit. And we need a gain, we have a gain on sale, because we are off by exactly $500. Thumbs up, no?
It's just the cash and then the gain on sale is confusing me because I thought that the gain on sale would have been 3,000.
Okay, so we sold for $3,000 cash. Cash is implied by this dollar sign. I didn't say like, we exchanged it for a cow worth 3,000. Okay? So this is $3,000, so I'm gonna debit cash for 3,000. And then all I do is, I see what I have on the debit side total. I have 20,500 and I have 20 on the credit side. 500 is a plug-in. If you want, write for yourself, this gain is plug. You plug in gain or loss, whatever is missing. Yes,
So if it was a loss on sale, would it still be credited?
losses cannot be credited.
Okay, so it'd be debited, would it go under the cash then?
It will be then one more line up here. So when I'm writing these journal entries, I'm trying to leave myself some room so I can always plug in an extra debit if need be. Okay? Does this make sense? You have question 5 that is related to these gains and losses and sales on Wiley Plus. Okay? If you're stuck on that question, it's not a hard one, but if you're stuck, I have a video on Moodle for this question exactly. Like for A, B, C, and D. Like half of you are checking your phones. So if you're gonna email me saying, I can't do question 5, ooh, I would say surrender your phone and go to Moodle. Okay? In Sorensen 255, what I usually teach, well, a long time ago, they had next time in Sorensen, people still have it. They used to have brochures that they will stick in those lovely pockets. Brochures are gone, but I think pockets are still there. So once I joined, because Jonka said, they put that for cell phones. Like in high school, surrender it in, and then I will have your full attention. Okay? I'm joking. And hopefully I got your full attention back. Questions? Okay? So we're good with these two. Right? I'm good. I'm gonna pause this.